Hello, and welcome back to the NearSight and FarSight podcast brought to you by the investment professionals at InSight. My name is Kevin Taylor. This is the third in a series where we're discussing the investment potential of the real estate investment trust Upside Avenue and its sister group, the Casoro group. We're going to do a brief introduction from John and Louise, our partners over at those two companies, and then we'll dive right into the third chapter here. We have already discussed the market potential as well as the process that they go through. So the topic of this will be on performance and some of the inflation or other hedging opportunities that real estate has. John, Louise, take it away.
Thanks, Kevin. I'm John Mendoza, Vice President of Acquisitions at Casoro Group. We're a vertically integrated multifamily investor and operator. We have in-house property management, in-house construction, and in-house asset management. Our mission is to provide better homes for better lives, which means we add value to our communities by focusing on the residents. We have an experienced track record and have been around for 20 years. We have been investing in Texas for over 15 of those years. In 2010, we were fortunate to be 11th place in Inc. magazine's fastest growing real estate companies, rising from 27th the year before. And our assets have won numerous awards. One of our prized awards has been Best Places to Work in Commercial Real Estate that we won this month and will be announced later on.
Thanks, Kevin. My name is Luis Zamora, and I'm the Director of Investor Relations here at Upside Avenue. Upside Avenue was created by our sponsor company, Casoro Group, to break the investment barriers so everyone could reap the benefits of real estate investing. On one hand, you have Casoro Group with the institutional capital and the deals, and on the other hand, you have Upside Avenue opening that door for the everyday investor. Upside Avenue is a non-traded public REIT that was launched back in 2018. In that year, we won the 2018 Commercial Real Estate Tech Award, and we have been backed by Casoro Group ever since.
So the cherry on the Sunday here for most investors, and certainly where most people kind of gravitate towards when they're vetting a partner, is in performance. And so we can't not talk about an investment without talking about performance. So I'm going to give you an opportunity to kind of explain to us where performance is going to come from, what other metrics we should kind of be looking at when we talk about performance. Because for so many of our investors, they're looking at, looming inflation. They've seen the dollar continue to get printed. We've coached them to seek out inflation resistant asset classes, which of course we put real estate in that group. But what is inflation going to mean for the coming rental environment, the coming real estate environment? And then so many of our clients are actually looking for alternatives to fixed income, to traditional bond assets. That how does real estate kind of meet that need for residual income and also maintain its inflation resistance?
Yeah, the great thing about multifamily and real estate in general is that it's a hedge against inflation. Multifamily specifically, we can adjust our rents to inflation on an annual basis because leases are timed on an annual basis. Office space, for example, their leases are 5, 7, 10-year leases. And while they do have a CPI index built into their leases according to inflation, it can sometimes trail real inflation. So multifamily is more of a real-time, we can make more real-time adjustments to inflation, which ultimately will benefit the performance of properties. In terms of kind of back end or reversionary or exit performance, one of the things that drives our returns is what will be the exit price of the property. And so while we have less control over that because that's focused on cap rates and interest rates and other metrics that are out of our control, that does drive a lot of performance over cash on cash sometimes. However, what we can control as an operator and investor is the business plan and how we drive rents forward to create as much value as we can to let the back end or the exit price take care of itself.
So we've coached clients. We work with people who are so used to viewing the world as, I get a current asset price from my Zillow on my single family home and I get rental incomes. But what you're saying is that most of your real return, most of your total return is going to come from the improvements you're making along the way and not driven by rents? Am I missing something there?
Well, they go hand in hand, but I'll say that we can control more of the business plan and how much we push rents. However, a big portion of what the returns are in reality also come from our exit price and our valuation and proceeds. And one of the things that we do as well is we focus on buying newer properties. And one of the reasons we're doing that is we're focused on 1990s and newer, is newer properties come with less issues. For example, properties that were built in the 70s and 80s were built with older construction methods. The physical plans of the properties are older. They come with aluminum wiring, which can be susceptible to fires, which mean higher insurance costs. So by us focusing on newer properties and newer construction methods and newer floor plans, we eliminate the risk associated with older properties that were built in the 70s and 80s.
Wow, it has been fantastic. I definitely appreciate both of your guys' time, and I look forward to this partnership. I look forward to being able to do more business with you and introducing some of our successful clients to your process, performance, and the marketplace nuance that you guys bring.
Thanks, Kevin.
Thanks.
Thanks, Kevin.
Thanks, guys. So if somebody is interested, obviously, we have a good partnership and we're driving them towards you. Where else can they go to get more information or just contact you directly?
Thanks, Kevin, so much for having us. And now, if anyone has any questions, Casoro Group or Upside Avenue, you can shoot me an email at lzamora, which is spelled LZAMORA at upsideavenue.com. Visit our website at upsideavenue.com, or just reach out to Kevin and we can be sure to connect. Thanks and have a good day.
Great. Thanks. That's awesome. This has been the third part in this series. If you've missed either of the other two, I do encourage our listeners or anybody tuning in here on YouTube to go back and to hear the little bit that we did on the market and what it looks like, as well as some of the Casoro groups and Upside Avenue's due diligence process and how they bring process into the equation, what they do when they're looking for a new property. So this concludes our 3-part series. It's been fantastic. I want to thank both John and Luis for providing their insight to us here at InSight. And tune in next time on the NearSight and FarSight podcast, brought to you by the professionals at InSight.